Question number 1. A U.S. subsidiary's financial statements are prepared following the accounting principles of its non-U.S. parent company's country, for inclusion in the parent's non-U.S. consolidated financial statements. What types of reports may the auditor issue? Letter A. Only a standard, unmodified U.S.-style report. Letter B. Only the report form used in the parent company's country. Letter C. A disclaimer of opinion, since two different frameworks are involved. Letter D. A modified U.S. report, or the parent country's report form. Correct answer is letter D. Explanation. Letter D is correct because the auditor genuinely has two workable paths here. Issue a U.S.-style report modified to reflect the foreign framework, or use the report form customary in the parent company's country. A plain, unmodified U.S.-style report wouldn't fit, since the underlying framework isn't GAAP. Question number 2. An auditor reports on financial statements prepared using the cash basis of accounting, a special purpose framework. What should the report include? Letter A. An opinion on whether GAAP was properly applied to accrual basis transactions. Letter B. A statement naming the framework and referencing the explanatory note. Letter C. A qualified opinion, since any non-GAAP framework requires modification. Letter D. A disclaimer, since cash basis statements cannot be audited. Correct answer is letter B. Explanation. Letter B is correct because the report simply needs to identify that a special purpose framework, cash basis in this case, was used, and point readers to the note where that framework is explained. A special purpose framework doesn't automatically mean a qualified opinion or a disclaimer. It can still get an unmodified opinion when applied appropriately. Question number 3. An auditor reports on financial statements prepared using the income tax basis of accounting. What must the audit report indicate? Letter A. That an unmodified opinion under GAAP could not be issued. Letter B. The specific tax rates applied in preparing the financial statements. Letter C. That the engagement was more limited in scope than a GAAP basis audit. Letter D. That the income tax basis, other than GAAP, was used. Correct answer is letter D. Explanation. Letter D is correct because the report's job is simply to flag that the statements follow the income tax basis, a recognized comprehensive basis of accounting other than GAAP, so readers know exactly what framework they're looking at. It doesn't need to spell out tax rates or frame the engagement as somehow more limited than a GAAP audit. Question number 4. In a group audit, how is component materiality typically determined for an individual component? Letter A. It is always set equal to overall group materiality, regardless of the component's size. Letter B. It is set lower than group materiality, limiting aggregation risk across components. Letter C. It is left entirely to the component auditor's discretion, with no group-level involvement. Letter D. It is irrelevant, since only overall group materiality is ever applied. Correct answer is letter B. Explanation. Letter B is correct because setting each component's materiality below the overall group figure guards against a real risk. Several individually immaterial misstatements across different components adding up to something material for the group as a whole. Using the full group materiality figure at the component level would let that risk slip through. Question number 5. An auditor is reporting on the financial statements of a U.S. entity that were prepared in accordance with another country's accounting principles. What is the auditor's reporting requirement? Letter A. The auditor should understand the other country's principles. Letter B. The auditor must obtain certification to practice outside the United States. Letter C. The auditor must disclaim an opinion on the financial statements. Letter D. The auditor must receive a waiver from their state board of accountancy. Correct answer is letter A. Explanation. Letter A is correct because the real requirement here is understanding. The auditor needs a solid grasp of the other country's accounting principles well enough to meaningfully evaluate the statements against them. No special foreign certification, disclaimer, or state board waiver is required just because a different country's framework is being used. Question number 6. After the date of the auditor's report, and after the audited financial statements have already been issued, the auditor learns of facts that existed at the report date and would have affected the report had they been known. What is the auditor's initial responsibility? Letter A. Immediately withdraw the original report without further discussion. Letter B. Discuss it with management about possible revision. Letter C. Wait until the next annual audit to address the matter. Letter D. Notify regulators directly without first contacting the client. Correct answer is letter B. Explanation. Letter B is correct because the very first step is a conversation with management about whether the financial statements actually need to be revised in light of what's been learned. Jumping straight to withdrawal, waiting a full year, or going straight to regulators all skip that necessary first conversation. Question number 7. Where should a basis for modification paragraph disclosing the substantive reasons for an adverse opinion be placed in the audit report? Letter A. It should follow the opinion paragraph. Letter B. It should precede the opinion paragraph. Letter C. It should be placed only in a separate addendum outside the report. Letter D. Its placement is left entirely to the auditor's discretion. Correct answer is letter B. Explanation. Letter B is correct because giving the reader the substantive reasons before they reach the opinion itself means they encounter the adverse conclusion already understanding why it was reached, rather than being told the conclusion first and left to search for the reasoning afterward. Question number 8. An accountant is associated with the unaudited financial statements of a non-issuer, having performed no audit or review procedures on them. What is the accountant's reporting responsibility? Letter A. Issue a disclaimer stating no opinion is expressed. Letter B. Issue a report expressing limited, negative, assurance. Letter C. Issue an unmodified opinion based on inquiry procedures alone. Letter D. Decline to allow the financial statements to be issued at all. Correct answer is letter A. Explanation. Letter A is correct because when no audit or review work has actually been performed, the honest response is a clear disclaimer making explicit that no opinion is being expressed at all. Offering any level of assurance, even a limited one, would misrepresent the fact that no procedures were actually done. Question number 9. An accountant performs a review of an issuer's interim financial information. What level of assurance does the resulting review report provide? Letter A. Reasonable assurance, the same level provided by an audit. Letter B. Limited, negative, assurance that no material modifications are needed. Letter C. No assurance of any kind, since interim reviews are purely informational. Letter D. Absolute assurance that the interim information is free of misstatement. Correct answer is letter B. Explanation. Letter B is correct because a review is a genuinely different, lighter touch engagement than an audit, built mainly on inquiry and analytical procedures. That's why it only supports limited, negative assurance, essentially saying nothing came to the accountant's attention suggesting the information needs modification, rather than the stronger positive assurance an audit provides. Question number 10. A predecessor auditor is unable or unwilling to reissue their report for comparative financial statements, and the successor auditor is asked to also report on the prior period. What must the successor do before expressing an opinion on the prior period? Letter A. Rely solely on the predecessor's work papers without independent verification. Letter B. Perform enough procedures to independently support an opinion. Letter C. Decline to express any opinion on the prior period under any circumstances. Letter D. Issue a report that simply repeats the predecessor's original wording verbatim. Correct answer is letter B. Explanation. Letter B is correct because once the successor auditor is taking on responsibility for opining on the prior period themselves, they need their own sufficient evidence to actually support that opinion, not just borrowed conclusions from the predecessor's files. Simply copying the predecessor's report wouldn't reflect genuine, independent work.